Thank you so much for coming to check out another episode of the Stashcast, where we have interesting conversations with interesting people focused on the world of commercial real estate and prop tech. The Stashcast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? You can with Needle. Come check it out at needle, NEDL.us to learn more. All right, today I'm very excited. I have Frank Sasso here with us. He is the co-founder and partner of Element8 Partners. He's had an illustrious real estate career leading up to this. And Frank, thank you so much for coming to join us.
Thanks for having me, Stash. It's great to be with you.
Awesome. So I touched on it a little bit, but maybe, I guess, could you give the folks at home a background on who you are and what you've done, and then maybe we can let it roll from there.
Yeah, for sure. So I went to Ohio State for undergrad, grew up outside of Cleveland on the west side. Went to Ohio State. It was very different when I went there compared to what it's like today in terms of just what the campus looks like and rankings. I definitely could not have gotten in currently, but back then it was a little easier. Had a great experience, real estate major. Always knew I wanted to get into real estate, but didn't have parents that owned a real estate development company. And so had to find my way in. And I often give this advice to people who are getting started. I say one of the best things you can do is either go into banking and finance or go into brokerage. Two great ways to learn the business. You don't need the family connections. You don't need the special skills. What you need to do is like work hard and be willing to learn and hustle and do the things that you have to do. So I started my career, I went the banking route. I started with KeyBank Real Estate Capital, went through their training program, was with Key for about 6 years, doing mostly commercial real estate lending. So I was in upstate New York for a while. I spent a couple of years in Seattle, back when Amazon was in an old converted schoolhouse on the top of a hill south of downtown. Very different time, but this was great. This was all in the early 2000s. So everything worked. Times were good. Deals were happening left and right. And so a young kid coming out of school could actually put some deals together and do some things. Ton of fun. Learned a lot. I knew pretty quickly that I didn't want to stay in banking for my full career. There are people that love it and make a great career out of it. I knew I wasn't one of those people, but I knew I was learning a lot. So I stuck with it through the downturn. I spent about a year there after the great financial crisis started. I always tell people I learned more in that year than in the 5 years prior, because you really, when times are tough, you really see who people are, both your clients, your competitors, your coworkers, good and bad, right? You see all of it, and I'm happy to talk more about that, but I'm really glad I stuck it out. Went back, got my MBA at Kellogg. We were living in Chicago at the time, and then had an opportunity. My wife got recruited to come work at the Med Center here at Ohio State. Had the opportunity to come back to Ohio, and it wasn't really on our radar. And I said, let me stay in Chicago for a while. Why don't you see how you like it? I'll see if I could find anything in real estate. And a good friend to this day, a guy named Bill Brennan, who's at Pizzuti, you may know, Stash, he introduced me to Brett Kaufman, who was just getting started out, launching something called Kaufman Development. And he was talking about community gardens and yoga classes and all this experience stuff that no other developer was talking about at the time. And this was 12, 13 years ago now. And I was really enamored by it. I was like, wow, this is really different. If half of what you're saying proves to be true, this is amazing. And so started a really great journey with Kaufman. I was employee number 2, built the team up, and it really helped be part of growing what I think is really a great mixed-use development company. So I was there about 12 years, ended up leaving about a year ago to have a little bit more freedom and flexibility from a family perspective, and then ultimately started Element8 Partners, which I've got 2 partners. They're both based in New York City. We're looking for small bay industrial and self-storage opportunities, both acquisition and ground-up development, mostly in the Northeast, the 95 corridor from Boston on down to DC, but then selectively we're looking in Indy, we're looking in Columbus, Cincinnati, some kind of selected markets in the Midwest and a little bit in the Southeast. So happy to say more about that. That was a long-winded intro, but that's a little bit about me.
Yeah, no, that's wonderful. What part of upstate New York were you in?
I was in Albany, beautiful Albany, New York.
Beautiful
Yeah.
Albany, New York. Yeah.
Beautiful Albany. And it was great because I was with a mid-market, it wasn't real estate, it was a middle market finance group. So these guys were like old school bankers. And we'd go to the lumber company who needed a line of credit, or we'd go to
Yep.
here or there. And so it was a great place as a 22-year-old to just learn the basics of kind of relationship building and how you underwrite a company and all those kinds of things. I actually liked Albany quite a bit more than I thought I would.
I went to St. Lawrence in upstate New York, so definitely in the North
Oh yeah,
Country. You're more Albany's. It's a center of attention for the state of New York for sure.
yeah, that's
You
right.
also mentioned that you stuck through and you really see the character of folks in tough times and been similar market like that today. Maybe you can elaborate on that. You don't have to name names, but we're seeing some of that right now. I've done some valuations on deals and we're not even close. And then I'll see a competitor roll it out and they're guiding significantly above where we thought it might trade. And it's just like, all right, you got to stay busy, but is that really the best use of your time? But that's up for
Yeah,
them to decide.
yeah, you're right, Stash. It's fascinating, and it's hard to. I think a lot of people can pontificate of like, where are we right now? Where are we headed in the market? I'm not smart enough to know. It does in a lot of ways. It does have some semblances back to '08. There's a lot of stress. It does also feel like it's a lot better than it was in '08 in some ways. Things are still trading. Things are still transacting. You can get capital. There's a period of time back in '08 where it's like nothing was happening, and it was just
Yeah.
stuck. What I have seen and I find fascinating, and I think it's just human nature, is it's easy to say that you care about people and you're number one, your team or your partners or your number one. But when your ass is on the line and you've got either a ton of money invested, you've got a signature on stuff, recourse stuff that may or may not be money good on the debt, and you've got your reputation on the line, it's really hard. It's really hard, I think, for anyone to live those values. And so you see people do not great stuff. I mean, we had a deal that we had a mezz loan on, and it was struggling. They stopped making coupon payments, and there were just signs of things just didn't quite add up. And so you start looking at the numbers and say, wait a minute, there should be more cash flow here at the end of the day. Well, sure enough, the guy was in such trouble on some other deals that he was stealing from the property. So he's stealing from his investors. He's stealing from us as his mezz lender. And so I remember, and again, I was probably 26. I had to go to this property up in Michigan and show up and say, hey, we're taking the keys back. And the staff was, what the hell is going on? And they had no idea, it wasn't their fault. And then just navigating through those kinds of experiences, I think it's not to excuse it, because there's no excuse for that kind of behavior. It's criminal. And then there's certainly other stuff that's just not ethical. Maybe it's not criminal, but it's not ethical.
Sure.
But you see how it happens. You understand people get their backs against the wall. And I think it doesn't feel like we're there yet, and maybe we won't get there in the coming months or year. But I think as long as rates continue to stay high, you've got this reset of, hey, I underwrote this deal to cap rates that I thought were 100 or 200 bips lower than they are now. And I still don't want to believe that they're where they are now. So I'll wait and push and hold off. It does seem like a lot more stuff is cash flowing this time around than last time. So yeah, it's just interesting to see. And I think it's also, and it's an opportunity for all of us, whether you're on the investor side, the sponsor side, brokerage side. These are the moments where I think great careers are built. You act with integrity, you work hard, you solve problems for people, and you show up tomorrow and you do the same thing again.
Every
Every
day
day,
you got to
right?
show up and do your best, and
And
you're
you
going to
do
get
right
kicked
by
in the teeth a
people.
lot, but
Yeah, that's right. That's right. But I do think it's how great careers are built. And when I say great, maybe it results in this huge economic success, maybe it doesn't, but it's the people that can look back on what they did over the span of 30 or 40 years and be really proud of the projects they were a part of, the teams they built, the assets they sold, whatever the thing is, whatever the metric is. To me, that matters a lot more than I've got X in the bank versus Y in the bank.
mhm. Yeah, you can look back and you might not have the 12 Lambos that you want, for instance, but you can look back and have pride on what you've done and look your kids in the eye and say, I always did what was right. And I think that's nobody's necessarily going to remember your bank account, but they are going to remember how you treated other people. So that's really important. That moral note. You guys did some really innovative things when you were at Kaufman. I guess you and Brett, could you maybe expand upon that? Like, how did you guys get started, and then where did it evolve to? Because you've done some great projects up there.
Yeah, thank you. Yeah, he gets all the credit. Brett was running Shot and Scene Real Estate Group here locally, which is a great developer. They mostly focus on the stash book for your listeners who may not know them. Their bread and butter tends to be well located suburban garden style stuff, and they do it like crank it out. They're still to this day doing projects all over Central Ohio, and probably I think they do stuff down in Florida and other markets. And I think Brett just got to the point where he wanted to push the envelope on design. He wanted to do different things with programming and have more of kind of purpose-built communities and really develop a brand around that. So he had the vision. He took the big risk to go off on his own. I was just a guy looking to move to the same town my wife was in, and I knew I wanted to get on the development side eventually. And so it was right place, right time. But it's a lot of things. It starts small. So the first deal was Gramercy out in New Albany, 322 unit garden style deal. Now is incredibly it was valuable at the time. It's incredibly valuable now because it's right at the doorstep of Intel and all that growth. But that was a project that had like urban barn aesthetic, but had really interesting design. But it was this almost rental townhome product that it came out of the ground at a time where cost, both construction costs and cost of capital, were such that you could really push the envelope on design. And then there were things that he wanted to do that really were at the time innovative, like the shared community garden, frequent yoga classes and other fit and CrossFit classes at the fitness center. And we built a really nice gym. It wasn't like in a closet somewhere. Now all those things a lot of those things have become just par for the course. Everyone's doing them. But I think that's the nature of the industry is you travel, you learn things, you evolve the product, and then everybody, hopefully, if you're doing it right, everyone else is looking at you and trying to catch up to what you're doing, and you keep going. For us, it was always an evolution. It was Gramercy. We did 600 Goodale, which is kind of the intersection of Grandview and downtown in the short north. And then we started doing more urban infill stuff, which ultimately led to the Gravity Project in Franklinton. So it was a major opportunity zone, big mixed use development, multi-phase, ton of fun to work on, very hard projects to do, requires a lot of incentives, just challenging in every way, but really unique. I love to tell the story. I didn't know it at the time, but when Intel was picking and doing site selection, they had this group of folks who toured, and I got a call late on a Thursday night and said, "Hey, I need you tomorrow morning to tour some people through Gravity. I can't tell you who they are or what they're here for, but it's important." So I said, "Okay, got it. No problem at all." And they get out of this Mercedes Sprinter van in Converse All-Stars and ripped jeans. And I'm like, okay, these guys probably are actually pretty important because you usually wouldn't dress like that if you weren't. And it turns out it was the global HR leadership for Intel. And they were saying, are there places in Central Ohio that we can convince people to move here from the coast and from other places? Is there energy? Is there a cool factor to this? And it was just a tremendous compliment, I think, to Brett and the team at Kaufman to say, yeah, this is an example of that. Let's tour through. If it were up to me, everything that we built would be a rectangle. It would look very Soviet, but because I'm more like the pro forma guy. But it's a ton of fun to be a part of that stuff. And I think when you're doing ground up development, particularly urban infill, obviously, first and foremost, it's got to be sound financially. You got to have a good pro forma that is not based on crazy assumptions and you believe is going to make money for your investors. But it's also an opportunity to push the envelope from an architectural perspective, from a design perspective. Maybe all your retail tenants can't be community oriented, but can you have at least a few that are? Can you make room for, we had at Gravity Phase 1, a nonprofit coffee shop that all their proceeds went to fight human trafficking. And they had great coffee, right? So can you make room for a couple tenants like that? Pelotonia is another one. Their headquarters is in Gravity Phase 1. Can you do things that are additive, both from a design standpoint and a tenancy standpoint, and at the same time, try to make some good money for your investors? And I think you can. It's not easy. It's the harder path for sure.
Yeah, that's fast. That's a great story about the courtship of Intel. I didn't know that. That's cool. I imagine I've got a couple of questions. One is around the incentives, and then maybe 1A of that is how do you find and then align yourself with the right advisors, read attorneys maybe, to line up those incentives? Then how do you get the community and city officials on board? Because the battle is, I hosted a panel back in 2020. It was like a week before COVID set in. And it was all about incentives. And the panelists were like, you could build product that looks like a concrete box, and that would maybe make money. But if you want those cool, good looking buildings, you need these incentives. And what we found is that the tax abatement valued on a net present value of the savings is essentially becomes a developer's profit. And profit's not a bad word. That's why we do it. Why would you do something to just break even? Unless you're a nonprofit coffee shop that is mission based. The dollars are, I assume, a little smaller with that than they are with these massive, cool projects. Then I also want to talk about, did you find with the other projects or with everything that you've done, that cool factor is really what set you apart from your competitors and let you drive rental rates maybe higher than anybody else?
Yeah, both really good questions, Stash. And it is funny to think about. Yeah, I think we all have those stories of what's that last thing I did before COVID, right? And it feels like a decade ago in some ways, and it's a different world now, looking back. But yeah, I think so. Here's the challenge with all this stuff, and it's understandable. I mean, you've got elected officials, most of whom, not all of whom, but most of whom mean and are trying to do right by the people that put them in office with varying levels of financial sophistication. Some of them are incredibly savvy, and you can sit down, you can run through a pro forma, they'll ask great questions, they get it. And some of them, they're very smart people, but that's just not the background they come from. We've all had, and this is not to disparage our friends in architecture, but we've all gotten the spreadsheet from the architect that the numbers don't add up and they're linked to different things. And you're like, what is this? It's crazy. And so you've got this one challenge of you've got to tell the story in a convincing way and explain it to somebody, and you might, in the same room, you might have drastically different levels of expertise. And then from a voter perspective, they're hearing from their constituents saying, I saw the guy roll up in one of his 11 Lambos, and why the hell are you giving him incentives? Like, why are you giving him our tax dollars to make so he can line his pockets, or she? And that's a real thing. I think as developers, you can gripe about it. This stuff wouldn't happen. You can stick your head in the sand, but it doesn't change the fact that that sentiment, not only is it there today, it's going to grow. It's just only going to grow, particularly in a market like Columbus, and I think Cincinnati as well, where we're fortunate to have good wind at our backs, good companies that are going to be growing, a startup ecosystem. We've got, I think, a really good trajectory in Columbus, in Cincinnati, markets like that in the Midwest that probably have some nice decades ahead of us. You're totally right that whether it's the CRA, property tax abatement, or a TIF, or some grant to do some certain, workforce housing or whatever the thing is, oftentimes that's the difference between a project that would just break even and a project that would hopefully make some money. It's not guaranteed, but at least on paper going in, you think there's a profit. Right. And what I've always tried to explain to elected officials is say, look, here are our return requirements for our investors. This is a lot riskier than sticking your money in an S&P index fund. It just is. And people understand that sort of intuitively, right? And so if an S&P index fund is going to get you 8%, you need to earn more than that for people to make up for the risk of all the stuff that could go wrong. And we're seeing it now. It's easy to forget when the market's good for 15 years in a row and it's just doing this. But you're seeing now like the stress and the pain, people having to hand keys back and that sort of thing. And so I think you've got to tell that story. And then the other piece of it is, and I actually would advocate that we start to do this and make this a requirement, is I think all of these projects should have, you spend a couple grand and have someone do an economic impact study, a third party, somebody credible that can say, yes, we're giving this property a 15-year tax abatement, but over the life of 40 or 50 years of this asset, or whatever, 100 year, whatever the asset is, here's the impact, job creation. Here's all the property taxes they're going to pay in years 16 through 40, net present value that back, on down the line. They're going to create 50 units of restricted housing, whatever. And so you've almost got this benefits one pager that I think gives a much different perspective on these things. So it's not just like, why are you giving all these wealthy developers free money? A, these projects wouldn't happen without it, just very simple risk return math. And B, it's not free money. There's a huge ROI for us as Hamilton County or the city of Cincinnati or whatever, and here's the ROI. Now you can quibble about how the economic impact study was done, or I don't believe it. You're always going to have those people that no matter what you show them, they don't care, they don't want to hear it. But I think for most people, if you tell it that way, which never happens, almost never do you hear that. But if you told it that way, they'd go, "Oh, I didn't realize that." Right?
That makes so much sense. I tend to pick up something new on each one of these, and that's definitely, oh, that makes a ton of sense. Go make a case and not just say, hey, give me this money, because it
I
helps
did
my pro
some
forma.
I did some child's math. I was on a panel for Business First a couple years ago, and we were talking about the downtown CRA, the downtown Columbus tax abatement. And I did some real child's math, and I'm going to get the numbers wrong, but it was in the hundreds of millions. I said every multifamily project, because Columbus didn't have any multifamily downtown 10 years ago, a little bit, but hardly any. And so you've got all these projects going up, many of which are cool. They have interesting architecture. They have good ground floor retail. They're great projects. I'm biased because we built several of them. But I just said, hey, you can say whatever you want about the tax abatement, but these buildings aren't going to fall to the ground in year 14 and 11 months. You're going to hit that 15th year, the abatement's going to roll off. And it was hundreds of millions of dollars stash that are going to go to the city, to the school district, to this on and on. And so the argument is, do you want hundreds of millions of dollars over a 30 or 40 year period, or you want $0? It's like
Yeah, because
pretty
that's the
simple.
alternative. It's going to be a parking lot or an underutilized building or
100%.
a blighted structure. And yeah, sure, you'll get existing tax revenue off of that, but it pales in comparison to your point of what that, and 15 years in the life of a city is theoretically a drop in the bucket. Now, for people, and maybe that's where sometimes the hang up is, 15 years is a significant amount of time in a person's life, but in the life of a city, that
Yeah,
it's not that long.
that's right. And I think it comes back to leadership, city council, mayor, county commissioners. We've got great leadership in Columbus. I know you guys have some really good leadership down in Cincinnati, Mayor Aftab and others. You got to have people that have conviction and are not so scared about getting voted out of office, and because they're just being so short-sighted. You've got to say, look, this is the right thing for the city over a long period of time, and I'm willing to lose my job over it. That's
Yeah,
hard. Most people don't want to do that.
no. Um, so on continuing that, what was did you host an interview process for the best attorneys and advisors and economic study people? Like, how do you find those? Is it networking, talking, asking around, sort of thing?
Yeah, that's I think most of it is it's talking to peers. As the great thing about our industry, we all compete, but we're all friendly too. We're all happy to help each other out. And so you can always call a peer and say, hey, who did you guys use on this application for this thing that you got or this grant? Oh, we worked with so and so. I think my approach when hiring, whether it's an attorney, whether it's an economic consultant, whatever the specialty is, are they masters of their craft? Do they really know what they're doing? And are they good people? Because to me, first of all, I don't want to work with people who aren't good people. And second of
Same,
all, I'm like,
100%.
if you come off to me as an asshole, just imagine how the administrator at the state of Ohio who's sitting there, I don't want to talk to you anyway. And now you come into their office guns a-blazing. I'm like, I don't want you representing me if that's how you are. And so that has served us well. I won't say that we always got it right, but I think whether it comes to legal partners, consulting partners, whatever the case may be, I think we've had some really good ones. We Gravity Phase 2 got awarded TMUD, Transformational Mixed Use Development tax credit, major tax credit from the state of Ohio. And when those awards came out, we had several of our peer companies call and say, okay, who did you guys use for
How'd you do
attorney?
that? Yeah.
How'd you do it? Who did you work with? And we had a great team. And but ultimately, and I think this is true of a lot of these things, is you can have the best team in the world, the most connected group of people. Hopefully, what matters the most is what you're actually pitching. What's the project? What's the impact? Can people get behind it? Can people see the story? Or is it smoke and mirrors and you're just trying to grab for extra dollars? Doesn't
Yeah.
always work out that way, but I think a lot of times that wins the day.
So that kind of goes to the third part of that initial question set is, did you find that all the extras that are over and above providing just basic housing, the gym, the community garden, or the fully stocked gym, not just the afterthought that's in a closet, like you said. Did you find that those things, and I wonder, were you able to quantify those things as, hey, here's, if we put this sweet gym in this community garden, it's going to cost us X amount of more dollars, but we can get X amount of more rent and things like that.
Yeah, and I'll just say, let me preface this by saying this is just my personal perspective. I think this is a question that you can really debate, and it's at the end of the day almost impossible to like definitively answer because
Sure.
there's so much other noise going on in this process. I think that you do get a little bit of a premium, maybe not much, but maybe a slight premium on rent. I definitely think you see slightly lower turnover. We would always study that compared to our comp set. What's our turnover percentage? How are we doing? And it's to say, well, is that because the gym is cool?
Mhm.
Is that because of the programming? Is that because our maintenance team actually cares about people and really takes care of them and and treats them like human beings? Yes, and yes. It's all of it. So it's hard to say. And we tried to say we spent $1 million more, doing this really cool mural wall and this architectural design feature and this and that. Do we get an ROI on that? I don't know, but I do think there's a sort of a collective investment that you can track to a little bit lower turnover, maybe a little bit more in rate, maybe it's a little bit better occupancy. At the end of the day, I think what you're going to, when you go to exit, it's going to be a cap rate and an IRR calculation for somebody. You might get a slight premium because they want to put the picture of the asset on the front of their quarterly, but I don't think it matters that much. I hate to say that. I wish it did. But what I go back to was, and this was always the mindset that we had when I was at Kaufman, was like, hey, we think there's a financial return on all this stuff, but at the end of the day, it's the right thing to do. It's the right thing for the community. It's the right thing for our tenants. It's the kind of stuff that our team gets excited to get out of bed and work on. And so that alone is a good enough reason, I think. But you don't need to say, look, it's got a 15% IRR if we add this little flourish.
It bumps it,
You know,
value add through Excel.
yeah.
Yeah, I'm doing a 6 unit project here in Cincinnati, and I'm following a similar, it's only 6 units, but and they're all one bedrooms, but I'm gonna make them really nice. And it's in an emerging neighborhood, but it's right across the street from a cool bar, like coolest bar in town, Binsky's. It's great. And I'm gonna put a mural on it, a flag of Camp Washington, that's where it is. And the thought is when people are like, oh, I live in that building, the building with the flag on it, and it's got washer dryer hookups in it. We're going to have solid surface counters, nice internal finishes. And the hope is that we'll get what I've heard and seen is if you offer the nicest units in the market or the submarket, you'll get your choice of the best tenants. And hopefully that will also lead to lower turnover as well. I'm trying to
Yeah.
replicate that myself. We'll see how it plays out, but
I
I have
think,
confidence.
yeah. What do you think about, so how do you think about the mural and the flag, for example? I'm just, you don't have to say what it is, but I'm just making up numbers. Let's say that's like an extra 30 grand of cost for you
Mhm.
to do that. Maybe it's more, maybe it's less, but how do you think about that 30 grand? What do you think about that investment in particular?
I am going to probably get some incentives from the community, from the neighborhood. So that's helpful. That's a kicker, but I was going to do it anyway because this is a neighborhood that has seen just stagnant investment, but with you literally, like, I wouldn't have done this deal if this new bar hadn't come in. And I've become good friends with Keel, who's the owner of it. And you go in there on a Friday night, he does a meat raffle every Friday night. So every 15, 20 minutes, he's raffling off meat and it goes to a good cause. It's good. You walk in there and it's full of, I'm like, these are my people. These are my tenants. And so it's got that cool kind of gritty vibe. And there's some traction and momentum from my lender. They're like, yeah, you're in a good spot. You're going to be all right. They did a study on the neighborhood. So it's again, this building has been vacant for as long as I've known. I did a search on the records because it looks like it had storefront at one point, and I searched through Hamilton County Auditor, and I was like, you guys have coded it as their land use codes, and it's a 401, which is 4 to 19 units. And as long as I could trace it back, it was always a 401. And they're like, no, it had retail on the first floor. I was like, I understand that it looks like it did, but I, per your records, I have no evidence of that. So you tell me. And so I won. But yeah, back to the mural again. It's that cool factor I'm trying to replicate that I think you guys have done a great job on, or Kaufman had, when you were at Kaufman, you had done on a much larger scale, and I hope to get to that level one day. But yeah, I want, yeah, because I was like, well, I could just do a white building with black trim. That's boring. It'll
Yeah.
stand out a little bit, but
Yeah. So pull on that thread a little bit and you say, okay, let's say you weren't getting any support from the neighborhood or anything, and let's say it's 50 grand, for example. You're like, I can do a white building with black trim, or I can spend an extra 50 grand that otherwise probably would have just gone in my pocket. 50 grand is a lot of money. So I'm probably not going to get any more rent for the mural. The tenants probably aren't going to care that much because they care about where it's located and what the unit feels like inside and the finishes and all the other stuff you talked about, which you're also trying to elevate. But the way I think about that is this is a neighborhood that's you're trying to spur activity and energy and help spur a turnaround. And is it going to be any one bar? No. Is it going to be any one mural? No.
no.
It is going to be, though, I think, and you see it time and time again, it's going to be the sort of aggregation of those things. Hopefully this mural is kick ass and people want to drive down there and take some selfies in front of it. And then all of a sudden people are like, oh yeah, I hear that bar is great. They raffle off meat. And so this energy starts going. And so you just did this little old 6-unit project, but it was part of this broader narrative and part of this neighborhood redevelopment so that when you drive by it with your kids, not only can you be proud and say, hey, dad did that and people love living there, but hey, this was part of this story of this neighborhood. Look at OTR and the early stuff that Model Group and others did down there to kickstart that. It's so freaking cool, and it pays dividends for generations, really, and it's these little things added up. And so that's the way I think about what you're doing with something like that. It's you can say, oh, it's just a simple little mural, but it's really not.
It's that cool factor. I think as you're speaking, I'm going for that cool factor of, and even if it just spurs a tiny bit more of demand, or man, I wish I lived in a cool building like that, then I can point to that as a previous example when I'm doing future developments and thinking about it on a much longer term instead of just this one increment here.
Yeah.
That's my perspective on it. Yeah. I'm excited. It's a grind. I'm doing a lot, but it's fun. I'm having a good time.
That's good.
Yeah. I'm also curious to get your take on brokers. What is the value or role of a broker? In your experience, what have good brokers done, and what are the characteristics of not so good brokers?
Yeah. I know you've asked this question probably to all your guests because I've listened to a lot of the back episodes, and I thought there were some really interesting answers. I know you've interviewed other fellow brokers and a lot of developers, a lot of owner operators. I think it goes back to the conversation we were having a bit ago about how you pick a great attorney or how you pick a great, economic consultant is what separates a good broker or great broker from a mediocre or a bad broker is, are you a master of your craft? Are you striving to be a master of your craft? Nobody's perfect. You don't need to be God's gift to real estate, but are you waking up every day and saying, how can I be a little bit better at this? And that's contagious. That's the kind of, you're like, well, that's going to make me better. It's going to want to make me be a better developer or investor or whatever. And are you a good person? Are you doing it for the right reasons? Are you trying to really, I think the best people are, sure, they're trying to make money, but they're trying to have fun and build lasting long-term relationships. There's a great book a lot of your listeners have probably read, Infinite Game, that kind of infinite game mindset where it's like, hey, this is not, I don't have a goal once I have $10 million in the bank, I'm going to retire and move to, the beach somewhere. Like, I want to keep doing this because I love doing it. It's a ton of fun. And I love helping my clients make money and helping new buyers come into a market and so on and so forth. I think those are the kinds of folks you want to do business with because it's enjoyable. And I think you also end up getting the best results from those types of folks. So it goes back to just being a resource. I think about it, we're on the investor side. My partners and I at Element8, we're going out, we're trying to buy industrial buildings or buy existing self-storage and do value add. But every time I talk to usually a broker or an owner. It's like, hey, can I be helpful in any way? Is there anything in my background, in my skill set, in my network on LinkedIn? I'll say this all the time to people like, hey, feel free to look on LinkedIn. If I know somebody, let me know, and I'm happy to make an intro. It's a small thing, but just trying to show up as a resource for people, no matter which side of the table you sit on, I think is just a fundamental best practice way to go about life. And I think those are the best, answering the question about brokers. I think those are the most fun people to work with.
Love it. It's great. I've got a sign in my bathroom. I created like this photo mural for myself of all these kind of little motivational things. And one of them is just about consistency and showing up every day. And you've got the example of a big flame and then a little flame and then, or a medium and then a little, that shows, because you can have this massive burst of excitement and then you lose enthusiasm. And there are people like that. And sometimes that initial burst is great, but it's that lack of follow through. And then there's the example below it that is just the same size flame that goes on. And it starts with just showing up every day and doing those, in my perspective, those things and trying to have fun.
Yeah.
You're not always going to have fun. Sometimes you're going to get kicked in the teeth, but you just
Yeah.
got to do your best.
That's right. That's right. And I think it's just, it's so many things in life. If you make it about money, you tend to make less money. If all you're chasing is a dollar, you actually tend to make less. It's inverse logic.
Yeah.
It's counterintuitive. But I think if you make it about trying to serve people, trying to have fun, trying to enjoy what you do, you're gonna do well.
I think you're right. So you've had a great career in multifamily so far. What spurred you to, because most folks they're at a given shop or company for X number of years and they're like, okay, I'm going to spin off and almost do the same thing, but under my own flag. Why did you choose to maybe switch product types?
Yeah, it's a great question. For me, it was a little unique where we've had some family health challenges. And so I got to the point where I just wanted a little bit more freedom and flexibility. I had a lot, in my prior role, but at the same time, when you're president of a company and you got 55 people reporting, there's always something, right? It never stops. And I loved it, but at the same time, I was ready to have a little bit more of a blank slate and be able to manage my time as I needed to from a family perspective. So it was part of the motivation. And then in terms of switching product types, I took a couple months totally off. I would take my little journal and I would walk to a park bench and I'd sit there like on a Tuesday at 11 a.m. journaling and thinking about, okay, where are the opportunities? I didn't want to just let inertia, okay, I got to do multifamily development because that's what I know how to do and let me go do that. It just kept the sort of every indicator I would look at said, it's probably not the right time to do that. It's also, I don't have some great big balance sheet, right? So it's not easy to just jump in and say, sure, I'll get a $50 million construction loan and do all this stuff. Or you got to start somewhere. So for me, I just felt, and I still think this is the case, it's very challenging to do any ground up development right now.
It is.
It's very challenging. You see a little still happening on the industrial side. You see a little still happening on self-storage, which is where we ended up landing, is small bay industrial and self-storage. But I think it's going to be a while. I think there's a lot of inventory that's still getting absorbed. It does seem like maybe multifamily is starting to turn a corner a little bit. It's been a rough, I don't know, year, however long it's been. But it does seem like there's some green shoots, but there's still a lot of inventory that's not yet delivered. And so it's going to be a minute to let the system digest all that. I also wonder, and I'm not smart enough to know the answer to this by any means, but when you look at the demographic chart, largest population group right now is like 30 to 35-year-olds. So core millennials, larger than the baby boomers. It's close, but larger than the baby boomers. And as those folks that they're in that age group that if they haven't already started families, many of them will be in the next couple of years starting families and inevitably will want to move out of an apartment. And so then the question becomes that next demographic group under them, it's smaller. And I think if you're in a great market, it may not matter that much. But if you're in a so-so market, I think you're gonna feel it. Not necessarily in the workforce and the Class B and the Class C stuff, because that is, you've got lifelong renters in that space, but certainly on the Class A, the stuff that's gotten a ton of new construction, I think it's going to be impacted. And so all that to say, I still think multifamily long term is great. It's a great place to be. My partners and I looked at it and said, we think the opportunity right now is in this small bay industrial, these hard to replicate sites they're not making more industrial grounds, certainly not in infill locations, right?
No. Yeah.
Just not, you're not going to see any more of it.
Talk about NIMBY. I don't want more housing. I don't want industrial. I don't want anything. Leave me alone.
Maybe more housing if I can get you build a park and do some other things, but
Yeah.
definitely no more industrial. And a lot of this stuff, when you look at who these tenants are, it's a subcontracting firm, it's an HVAC guy, it's a maybe small tool and die manufacturer, it's a CrossFit gym. It's that kind of stuff.
I was at mine this morning.
Yeah, you're familiar, right?
Yeah.
You're probably still sore. It's that kind of stuff. And so we like it's mostly kind of B2B customers, a little bit of B2C, and they really need to be in a certain specific location because they want to access their customer base. And so we like that. It's hard to come by, but we think there's a really interesting potential to do that nationally. There's really as far as I'm aware of, there's no brands. In self-storage, you've got Extra Space, you've got Public, and you've got the big REITs that have aggregated and have these recognizable brands. Small bay industrial is like a backwater, a little bit of
because it's not easy.
Real estate.
It's not standardized. There's a lot more thinking that goes into it.
Yeah, it's not efficient. Yeah. All the reasons why it's probably a terrible idea for us to be.
No, I think you're in a good space. You should talk with Ash Patel. I'll introduce you afterwards. He was on the podcast 2 weeks ago, last week. I don't know.
That'd be great.
But he's been that space as well, and he had a great perspective on it. We're not looking at it like multifamily where you come in and you can raise the rents. We're really looking at it as you've got to buy it, and then it's going to be stable, and you're going to sell it for probably about what you bought it for, but your cash flow is going to be great through your hold period. And I was like, oh, that makes a ton of sense. I get it. And if there is an opportunity to re-tenant or value add through it, that's a bonus almost.
Totally. It's like your flame picture in the bathroom, right? Hey, can I consistently hit a bunch of doubles, maybe the occasional triple, some singles, some duds or whatever, but in doing so, you can actually generate a lot of cash flow. Maybe there's a little bit of there's no big pop, I don't think, like multifamily, but maybe there's a little decent upside on the back end, but you do it consistently over time. I think that's how great businesses get built. And oh, by the way, a lot of the stuff that I'd love to connect with him, a lot of the stuff we're looking at is in pretty rough shape, and it's an eyesore, maybe in the little industrial pocket of town, but no one likes driving by it. And so even just cleaning it up, painting the exterior, putting down fresh asphalt, some nice signage, some nice landscaping. I just think even that is, in a small way, is a value add to the community, because now I don't have to look at this like eyesore every time I drive by.
Yeah, no, that makes a lot of sense. In your new practice, or there are two ways to ask it. Are you using any technology platforms? And if you are, what are the ones that you're using?
We should be using Needle, I think. Whatever.
As soon as we get to that space, you'll be my first call.
Yeah. I love what you're doing with it. You and I've talked offline about it. I think it's great. And it's almost crazy that someone hasn't done it yet. And so I think it's really great that you're doing it. You keep sprinting towards your goal line on
Grinding,
that.
man.
A lot of it's CoStar. A lot of it is going back to brokers, especially in the small bay space. There is really not good data. It's very hard to come by. And so the value add a broker brings it's even greater in that scenario, because it's like you got to talk to the guy or the gal who's in the market, knows these folks, knows these owners, and can really share with you good data. Otherwise, you can't really have solid underwriting. So it's brokers, it's CoStar. On the self-storage side, we use a platform called Radius Plus, which is a pretty big self-storage information aggregator, but they all have their flaws. It's way better than 20 years ago, where none of that stuff existed.
Sure.
But you'll find things, we've all seen this. You'll look on CoStar and you're like, I know that's not their rents. And I know that's not, you're like, I just sold that asset. I know exactly what their rent roll is. And it's not what CoStar shows, right? On Radius Plus, guys will go in and say, guys that own 2 self-storage facilities in the submarket will go in and because users can identify future development, and they'll go in and put 100,000 square foot plant. It's not even real, but they're like, I don't want anyone else to develop in this market, so I'm going to put that in. And so it's just very much an imperfect science.
Oh, they
right
can
now.
game it. Okay.
You can game it. And so I think that all these analytic platforms, it's way better than not having it, but you got to just use it as one tool. And real
Yeah.
estate at the end of the day is still a touch it, feel it business. And so you gotta, even if you're not local, you gotta make the time to go there and talk to people, build
Mhm.
relationships, drive, walk,
Yeah.
you touch it, feel it.
Yeah. Yeah. I demoed that Radius Plus platform and I thought it was great and would love to find a way to integrate with them potentially down the
You
road.
should.
So, yeah, it's awesome. Frank, this has been a wonderful conversation, my friend. If somebody has a great self-storage or industrial flex bay and they want to pitch it to you, what's the best way to get in touch with you?
We'd love nothing more than that. It's
Yeah.
Element8, the number 8 partners.com. Element8partners.com is the website. And I so appreciate you doing this. It's been a ton of fun to talk to you. And I love that I'm a big podcast guy, so it's near and dear to my heart. I love that you're taking the time to have these deep conversations with people that are a mix of kind of personal, professional. And I just think it's a great value add to the community. So thanks for doing it.
Awesome. Thank you so much. Yeah, I do it because as you and I were speaking over the phone over the past, I don't know, 10 years or so, it's more, hey, Frank, I have a buyer for your property. Do you want to sell it? And you're like, no, and we would have some other conversation outside of that. But I really, and maybe this is a personal flaw, when I'm very like mission focused, let me go get this done. And I'm good at that, but it doesn't leave a lot of room for this. And I started this as a way to have deeper conversations and build better relationships. And here we are.
That's great. And you're doing both. I think they're not mutually exclusive. And that's a good note to end on is you can be mission and goal focused and make time to connect with people on a deeper level. And you should.
Yeah, absolutely. Well, Frank, thank you so much. And I hope
All
you have
right,
a great
buddy.
rest of your day.
You too, man.
Okay.
Thanks.
Bye.
See you.